What if I told you you could keep 100% of your remote salary? That sounds unrealistic, but in some countries it's closer to reality than many people think. Many remote workers think carefully about rent, weather, safety, and lifestyle, but far fewer think about one of the biggest factors that will influence their quality of life in their new location: how their new country taxes foreign-sourced income. Some countries use what is called a territorial tax system. In plain English, that means they usually tax income earned inside the country, not income earned from foreign sources. So if you live in the country legally, but your work and clients are based outside of the country, your remote income may not be taxed locally. In this video, we are looking at 4 Latin American countries where remote workers can live legally and potentially pay zero local income tax on foreign-sourced remote income. First is Costa Rica. If you want a tropical lifestyle with a solid infrastructure, this is a great option. Costa Rica operates on such a territorial tax system, offering a total exemption from local income tax on your foreign earnings. They even waive customs duties on electronic equipment that you need for your remote work, so you could bring your gear hassle-free. To get their digital nomad visa, you need to show an income of $3,000 per month for an individual and a bit more for a family. The visa gives you a 1-year stay, and you can renew it for a second year if you spend at least 80 days in the country during your first year. If Costa Rica's income requirements are a little bit too steep, Ecuador is a solid alternative. Ecuador also operates a territorial tax system, so your foreign-sourced income will not be taxed locally. Plus, Ecuador utilizes the US dollar as its official currency, which is huge for American expats because they face zero currency exchange risk, making your financial planning more predictable. For remote workers, Ecuador has a dedicated digital nomad visa, which requires a monthly income of 3 times the local minimum wage. As of right now, in April 2026, this is about $1,446, and the visa is valid for 2 years. Next on the list is Panama. Like other countries, Panama also operates on a territorial tax basis. Foreign-sourced remote salaries are completely tax-exempt locally. Panama offers a digital nomad visa called the short-stay visa for remote workers, and to qualify it requires that you prove an income of $3,000 per month from foreign sources. The visa allows you to live and work in Panama for 9 months, and it can be extended for another 9, giving you a total of 18 months of tax-free living. The government fees are also reasonable, sitting around $300 in total. And finally, we have Uruguay. Uruguay is a hidden gem and one of the simplest examples of nomad permits in Latin America. It has no fixed income threshold to qualify for the visa, and instead applicants are required to submit a sworn declaration stating that they can support themselves financially and pay a small fee. In practice, showing around $1,500 to $2,000 per month in bank statements can help strengthen your application. The permit is granted for 180 days and can be renewed for another 180 days. Uruguay also has a territorial tax system, so again, foreign-sourced remote income is generally not taxed locally. And for people who do become tax resident, Uruguay offers a major tax advantage on certain foreign investment income for up to 11 years. So this is not everything tax-free forever, but it is still one of the most tax-friendly options in the region for remote workers earning money from abroad. And finally, let's conclude with an important note for American viewers. This video is about local tax income in the country where you live. The US taxes its citizens on worldwide income even if you're living abroad. Some Americans can reduce or eliminate US tax on foreign earned income by qualifying for exclusions, often by spending enough time outside of the United States. Nevertheless, these 4 Latin American countries give you solid options if you want to work and live abroad and reduce your tax burden.